Welcome back. This is Market Masters, actually not so much economy, because the earnings season is drawing to a close and the Nifty is trading at barely a 5% growth in first quarter EPS. Year on year, it's flat. Just 2% year on year rise in the Nifty index itself. With tariff headwinds still very strong, how is the earnings picture going to look for the rest of the year? And of course, the market picture. Bond markets have actually done worse. Despite massive rate cuts, and the 10-year yield is actually a 0.25% higher than it was in early June. So therefore, what are the prospects for both fixed income and for equity markets? We have with us Ashish Gupta, the Chief Investment Officer at Axis AMC. Ashish, good morning and thank you very much for joining us. Ashish is also a master of the F&O market. He's also a very keen observer of the banking system. So time permitting, all those questions. But Ashish, first up, the earnings season is almost ending. Maybe one or two results to come. What's the sense? How has the season itself been? And what are the next 3 quarters looking like?
Oh, I think Latha, the earnings season has kind of somehow reiterated the trends we saw last couple of quarters. I think earnings have not disappointed too much, but the overall growth continues to be lackluster. It continues to be in the single digit. And actually, more than the earnings per se, I am actually also tracking what is happening on the top line. And actually, if you see the top line growth that we continue to deliver is only around 6-7% for the broader market. Of course, in some sectors, in some mid cap and small cap cohorts, you are getting still between 10 to 12% top line growth. But for the larger cohorts, you are actually continuing to see top line growth continue to stay at about 6-7%. I think this is reflective of what's happening in the economy as well. And I think one thing we underappreciate is that we actually live in the world of nominal GDP rather than real GDP. Right? And while we focus on the real GDP numbers, actually now consistently for the last 4 years, we have been seeing a drop in nominal GDP, and that's kind of weighing on corporate earnings as well. And I think this is what's reflective. The slowdown in nominal GDP is reflected in your GST collections. They are, as you know, also down to about 6-7% growth. And I think the trend is quite clear. Right? So post-pandemic, I think FY22, we had almost a 20% nominal GDP. Right? Of course, we were coming from a low. And since then, we have consistently seen a drop in nominal GDP. Right? So from 20% growth in FY22, I think next year was about 15%.
Yes.
The following year was around 12%. Then last year, we were sub 10%. And I think this year, or at least currently, we are probably around 8% or so. And I think that is something that is going to weigh on corporate earnings.
Okay. Well, just for those who don't like this kind of jargon, nominal GDP and real GDP. Real GDP is the actual amount of goods and services that the country produces more than last year. But then you have to add a price rise, then you get nominal GDP. The point is the price rise has not been much. Actually, wholesale price index has been negative year on year. That's why Ashish is complaining. The nominal GDP has been bad. Actually, the number that will come out on August 31st for the first quarter, we may see a huge convergence of nominal and real GDP. Okay, I take your point on that, Ashish, but the useful point in the result season has been the performance of the mid-cap segment. We have seen some standout performance. I'll just read out from a report I have, and I'm reading EPS earnings, yes, not top line, as you say. See, cement is up 35%, obviously because of base reasons as well. EMS, up about 46%, logistics 20%, healthcare about 11%, real estate again 40%. So do you think that we are looking at the wrong place? We are all used to looking at the Nifty and the big stocks. Will mid-cap deliver as good and better for FY26?
So I think there's no doubt that there are certain pockets, and actually, it's some of those pockets are reflected even in the large cap, maybe not in the Nifty, but if in the Nifty Next 50, where instead of single-digit top-line growth, you are getting double-digit top-line growth. So if you see that cohort, you are getting instead of 6-7% top-line growth, about 11-12% top-line growth. And in some of the sectors, like you mentioned, cement, real estate, hospitality, you are actually continuing to see a 20% plus kind of earnings growth. Uh, what we also have to keep in mind is that expectations are also similarly high for those sets of companies and those industries, right? And if you look at the average multiples that these companies are trading at, that's literally at a 60-70% premium to what the Nifty is trading at. So I think yes, some of these have delivered, and actually, the good news is that we have not seen an increase in the misses in earnings. So what first quarter delivered both for the Nifty companies as well as the broader set of companies was largely in line with expectations. But the fact is that for the broader market, we have seen only a single-digit earnings growth.
Okay. So therefore, if you can give us some forecast for the year, we have the tariff headwinds. Now, the best case scenario has become if we are back to 25%. You know, that 50% is such a complete embargo, as the Gokuldas exports gentleman pointed out. It's a no trade zone. So what is a working number? I know it's a difficult question because it's such a mercurial position we are dealing with. But what kind of earnings growth can we look at in the Nifty next, as you call it?
So I think we should not, at least for the earnings growth perspective and short-term earnings growth perspective, really focus too much on tariffs, right? So fortunately or unfortunately, we don't export much to the US, right? So our merchandise exports are only 2% of GDP. There is some carve-outs as well out of that. And on top of that, if you take out the piece of value add, so the impact on GDP will not be material. Of course, there will be some sectors and companies like textiles, as you mentioned, that may see a larger impact. But for larger corporate India, it will not be material. I think of course, it's a challenge for us because we were actually hoping that there will be a huge opportunity for us as a country to develop as an alternate manufacturing base, and some of those plans may come under cloud. But for earnings per se, I think what is more important is what's happening on the domestic economy. Given all the liquidity infusions that we have had and drop in interest rates, do we see a revival in domestic growth? Yes, and consumption has been weak. We have seen, fortunately, now for 3 quarters, rural
Ashish, I'm sorry, I'm going to interrupt because I'm going to pack in so many questions. So just tell me, what sectors will Axis AMC bet on in this mid-cap space where we have seen growth?
Sure. So we do like real estate. We are actually seeing on the real estate side, the commercial cycle actually continuing to strengthen. We like still capital goods space, and if you see earnings delivery among companies such as power equipment manufacturers continues to be very good. We like healthcare and hospitality, travel sector. So there are the whole host of sectors which continue to do well, and the growth rates here are significantly better. Similarly, on the consumption side, while aggregate consumption trends have not picked up still, but you actually still see market share gains for retailing companies. You see for quick commerce companies, consumer tech companies.
Yeah. Take your point. All those, we were just discussing NICA numbers looking very good. So quick commerce, consumption, all doing well. Let me cut to a topic which I used to interview you frequently in your previous avatar. ICICI having this higher minimum balance. How do you look at it? Do you think that there is going to be an elite versus mass, classes versus masses kind of division in the banking sector itself?
I think the fact is that banks also have this challenge of providing high quality service, right? And I think both because of the customer's expectations as well as the fact that the regulatory burden on the quality of service being provided is increasing. In fact, if you look at banks in India, the kind of services they provide for the fee, including real-time transfer, I think that is unparalleled anywhere. So I think in some senses, it is fair for banks to kind of look at cohort of customers where they can meet the customer's expectations and
Okay, I take your point on that, but I think I'll have to invite you for 3 separate discussions because I have 3 separate areas to ask you. Finally, leave us with what we should expect in the F&O space. There is some speculation that weekly will give way to fortnightly. Is that a solution to the somewhat recklessness that we saw in the weekly expiries?
So I think what SEBI has done is really act on 2 fronts, right? So one is on the regulatory side, and then it found some potential mispractices in the industry. So it has come out and used its supervisory powers to clamp down on some of the practices. I think there have been multiple regulatory actions taken between October and March, and some of them will continue to get implemented over the coming months. The good news is that we are seeing some tempering down in the volumes and activity in the F&O market. So my sense is SEBI will probably wait to see what is the impact of these measures. And if these measures don't prove effective, then it will come out with the next set of measures, right? But as of now, the first 2 sets of measures are still being implemented, and at least directionally, it is showing an impact on the market.
Okay. Thank you very much, Ashish. That's some kind of hope for, the market intermediaries more than anyone else. BSE will be happy if it continues with that expiries. It's a money spinner for them. We have to wrap up on Bazaar, not because we are out of questions, we are out of time. Thank you very much for joining us. The market's actually surprisingly positive today. And let's hope it continues like that when Chartbusters comes up after the break.